Welcome, everyone, to today's deep dive into XRP and Ripple and the explosive events just waiting to happen. If you have been following the crypto scene, you know Ripple and its XRP token have been in the center of attention for years, battling authorities, forming strategic alliances, and laying a basis many believe might permanently transform cross-border payments. Today, I want to cover all you need to know about the forthcoming June 16th event, the alleged trade ban, institutional maneuvers, price goals, and why analysts believe some of the largest market changes in crypto history will result. First, let us begin with the June 16th blackout, the center of the rumors. This is supposed to be a coordinated stop in XRP trading on main exchanges, including Binance US, Coinbase, and Kraken. The aim is to get the market ready for a massive price pump capable of upheavals to the whole crypto economy. This may sound like crazy conjecture now, but looking at on-chain data, market behavior, and historical antecedents, it is evident that something significant is definitely under place. Although exchanges sometimes stop trade to adjust liquidity, control risk, or comply with regulations, the scope and timing of this alleged blackout point to much more than ordinary maintenance. Right now, a lot of FUD, that is doubt, uncertainty, is floating about. Past panic selling among many investors has been brought on by headlines about delisting, SEC actions, and regulatory clampdowns. History, however, shows us that XRP has shown amazing resiliency and even more potent returns following these occurrences. Consider the SEC litigation. For instance, XRP dropped, trade stopped, and the community was in upheaval as the SEC lodged its lawsuit against Ripple Labs. But XRP bounced and soared, outperforming many other altcoins following months of calculated legal successes. The present scenario reflects that trend. First, food, then institutional accumulation, and finally a strong market movement. Regarding institutional accumulation, the last 72 hours before the allegedly planned blackout are absolutely vital. Institutions don't just enter markets mindlessly. They get ready, arrange themselves, and silently gather. Whales have been observed transferring significant amounts of XRP into private wallets, liquidity pools showing indications of drying out, and on-chain analytics showing moves from exchange wallets to cold storage. This indicates readiness for a supply constraint, among the most powerful pricing influence in any market. Retail investors that wait too long run the danger of missing the chance to buy before the price spikes. Why then would institutional players be so fascinated in XRP right now? It ultimately boils down to the regulatory scene and Ripple's court success. The historic decision that XRP sold on secondary markets is not a securities eliminated removes a key obstacle for institutional adoption. Reportedly looking at spot XRP ETFs, BlackRock, Fidelity, and other big asset managers would be able to provide XRP exposure via conventional financial products free from the complications of crypto wallets or exchanges. The arrival of these financial behemoths would let trillions of dollars in cash flood XRP. What therefore might the price of XRP look following blackout? Reflecting careful institutional entrance and regulatory clarity, conservative experts propose a baseline objective of $8 per XRP. From present rates, this would already show a significant increase and indicate that XRP is definitely returning as a top-tier crypto asset on the map. Then, there is the optimistic scenario, also known as the bomb option, when XRP might climb above $50 or even above. This would call not only ETF approval, but also major banks using RippleNet for cross-border transactions, worldwide collaborations growing, and broad retail acceptance pushing daily XRP use as a payment token. Under such conditions, XRP's market capitalization may either equal or exceed Ethereum's and even question Bitcoin's hegemony in the crypto space. Let's also discuss the technical signs endorsing this positive view. XRP's chart has displayed a golden cross, a famous bullish pattern in which the short-term moving average crosses above the long-term moving average. Historically, this trend has preceded some of XRP's most notable movements, like the 2017 bull run when XRP jumped by around 36,000. Technical analysis, mixed with basic events, presents a strong argument for a significant price spike, even while past success does not guarantee future results. Apart from legal and commercial considerations, adoption is a main driver. Quiet but progressively forming alliances with financial institutions and payment systems